All right, I see it. Yep.
Here we go. Hey guys, Chad Sorci, SmartHouse Lending. Got John Giacovelli, SmartHouse Lending. Craig Helm with Charles Rutenberg Realty.
Yep.
You guys have a good Memorial Day weekend?
Yep. Peaceful.
Nice and quiet.
Yeah,
nice and quiet.
I was working on a couple pre-approvals that came in. So yeah, it was just definitely makes you think, how grateful we are for our freedom that we have, and for the different, soldiers that have laid down their lives for our freedom. It must have been
absolutely.
I don't have anybody in my family that I know, but that have, my stepfather was in the military, but he lost friends and stuff in the Army. But me personally, I don't have any close friends, that I've lost in the military. But it made me think yesterday how, we're lucky to be with our families, and there's guys out there that are fighting, yesterday, or, to protect our freedom. So definitely grateful for that. And
absolutely.
You guys are here with me today. So, John, we were talking last week, and Craig, John, you want to talk about a couple things to share with some potential first home buyers, some tips maybe?
For sure. And just stuff that I think I personally run into a lot. And I know, I'm sure you do also, Chad, and Craig probably does too. But as with the debt to income ratio that we do to figure out how much of a house the lender says you can afford, it's super important to remember your debt to income. Just a slight modification of your debt to income ratio can lower your debt to income and also open you up to another category of homes, that you can look at and maybe get more of what you want. We run into a lot of times, Chad. I remember this on one that we just did a couple of months ago, but even there's a small line of credit on there that has a $50 a month payment and only with $700 balance left on it. Paying that off and loosening up that $50 a month, adding that back into a positive on your debt to income, helping you so it lowers it, just can do a lot for you. And I think a lot of people don't know that that's how debt to income ratio works, but that can open them up to a whole other category of a house, right? Correct?
Yeah, most definitely. We have a credit scenario building tool, which will actually, you can actually plug in, like if you wanted to increase your scores, what would happen if you paid down a credit card? They say a lot of people get excited when they have some money and they pay off that credit card and close the account. Well, that actually can hurt your credit score if you close the account. The typical rule is 60-40, 70-30, maybe balance to credit limit. The safe zone, I would say, would be 30%, balance to the credit limit. But my wife and I, we've been working on trying to buy a house as well. So we recently just paid off our credit card debt. And so we're trying to find a home. It's a great time to buy right now. A lot of good deals I'm sure you guys are seeing out there. And we're hoping to buy here maybe within the next couple of months. But we're first-time home buyers. I'm in the business, so if anybody should be a homeowner, it should be me. But, we just came up on our 3-year anniversary, and we're taking our time, and we want to make sure we find the right thing. Our daughter's got 1 year left of high school. She can be a senior next year. So we want to look in where we're going to buy. It's all about location. Maybe, Craig, you could, talk about that a little bit when it comes to looking for homes for your clients, and what you think about, the area they want to live in.
Usually if they still have, you're talking about, kids in school yet, and usually they want to get into a district where the schools are good. Mm-hmm. So they'll search for all the houses in that particular school district. Go out. You can Google the school districts. You can see where the boundaries are and what it covers. The area. Then you can do some research in that neighborhood to look for any homes that are available for sale. In your price range.
Right.
And then obviously once you get get a pre-approval letter and know what you can what the price range you can afford in, And usually you get like a maximum value, but you don't go up to the max value. You get a range. Gives you a ballpark figure. And usually you'll stay below that price range when you look for houses. And basically,
nice.
And then of course, if they're empty nesters, if they're downsizing, they don't care. Obviously, they don't care about the school district. You can do pretty much the same thing, area where you want to look in, and there's less constraint there as far as what where they can look, because they don't have this worry about kids going to school,
right?
So you can open up a whole new variety of homes that they want something that's maintenance free, like a condo or a townhouse or something like that. Or
that's nice.
Or a community with services, with amenities, like the community house and the pool and the
low maintenance,
or maybe even on a golf community even.
Right. Are you finding, Craig, that there's a lot of people that have been looking for you to show them a bunch of homes, but they haven't even been pre-approved for a house yet? Or
no, I mean, I don't even. And my criteria is they have to be pre-approved by my qualified lender first. It's waste my time to go out and look at houses because they're not pre-approved. Because number one, I don't know if they can get a mortgage. I'm not saying they can't, but I don't know what price range they're in. I know how much house they can afford.
You said a key word there, Craig. You said qualified lender. I like that.
Yeah, but
like
when the pre-approval, when I look at the mortgage, I look at all the stuff that goes into the mortgage, the closing costs, and if there's an HOA involved, that adds to the monthly cost of the house. It's like one of those, because you got principal interest, insurance, and then if you got an HOA, and you throw in the HOA fee, it could be a smidgen, like maybe $25 to $35 a month, or it could be a couple $100 a month. Because I've seen some really, really high HOAs in certain communities.
We talked about
that. Especially gated communities.
We talked about that a little bit. Didn't mean to cut you off. Sorry, Craig.
That's fine.
We talked about the property taxes and insurance on our last meeting, and we didn't really get to talk too much about home insurance, but the property taxes, people are, they're getting their pre-approvals, but they're not, when you don't have a house picked out,
right?
It's a tough one because those property taxes can really throw you off on your debt ratio. You're looking pre-approved for maybe $200 a month, let's say $2,400 a year, but then you're over in a different area and you find out property taxes are $3,600 or $4,000 a year. And a lot of people right now that I've been seeing, debt ratios are very tight. You're allowed typically 40% back end debt ratio for first time home buyers. If you're a seasoned on your job, you've got a lot of assets, AAA credit. I mean, you can see pre-approvals up to 55% desktop approval, and every lender's different. Some have a cap at 50%. Some will accept those findings as is if they're a direct seller to Fannie Mae or Freddie Mac, and maybe they're servicing the loan. So us being brokers, we're able to shop around for our clients, and we have a little bit more options. We have more options for our buyers' financing needs. And I have a step-by-step guide on home buying process that I just came across. If you guys, I can share that with you and kind of take a quick look at it real quick, if that's cool.
Yeah, go ahead. Put it up on a screen. Yep.
Check it out. Can you see that? Are you able to see?
It's coming up. Yep, there it is.
Yep, there you go. Yep, usually takes a couple seconds. Okay.
Step guide to home buying process. And before you begin, you want to obviously look at viewing properties in person, obtaining your loan pre-qualification, which you mentioned, Craig, is important.
Mm-hmm.
And that way you know what you're doing and what you're looking for. I can tell you, for me personally, looking around for homes with my wife, I mean, we're all about looking at the different area where we want to live. So, you see all these great purchase price and low, different price points, but you go out there and you see the home, it's it's not even an area where you want to live. So I would like to stress that really important for people when you're, figuring out where you want to live first. Obviously get the pre-approval letter. I mean, you may not have other options to decide where you're going to be living based on your pre-approval letter. You may find yourself, a little disappointed. Maybe it's going to be another 3-6 months more for saving up. But, we talked about, property taxes depending on the county, homeowners insurance dues, association dues, as you mentioned, Craig. They can be very costly. We've seen them, 190 that I've seen them as high as, $450 for certain homes and condos. So,
Right.
Me personally, I'm not looking to pay those kind of fees. Flood insurance, certain areas require the flood insurance. And then repairs. I mean, I've had a lot of people tell me, well, we want to buy a fixer-upper, but a lot of these lenders are not doing these fix and flips, repair type home. We do have an FHA 203K program with one of our lenders that will allow you to finance in the repairs if it's a new roof. Maybe you need, new AC. You want to upgrade your kitchen right away. So we do have that 203 FHAK program available. But this talks also, the repairs needed, and you can address it up front after your home inspection. If something comes up, the seller can reduce the home's price, or, you can ask the seller to carry out the repairs as a part of the purchase contract. So it can be a little tricky, but you want to make sure that these repairs are, can be handled by your lender with the financing. Shopping for your home here, as it talks too more about, as we discussed, the debt ratio. It's the front end. It consists of your monthly gross income required for the proposed monthly loan, and your back end of the debt ratio is the income required for proposed monthly loan payments plus any other monthly bills and expenses. So the front end, keep in mind, is just the actual payment of the loan. Your total back end debt ratio is your, credit card debts that may report on the credit report, your car payment, car lease, student loan debt. It could factor in collections if you've had medical bills that were maybe charged off, any kind of, repos. Each guideline, Fannie Mae, FHA, VA, they have different, minimum requirements for that. So make sure when you're applying that you can find out, determine which loan program you're going to go with. As I said, most conventional loans are approved up to 45% or less. We've seen approvals up to 50, 55. But with this COVID-19, they're really trying to get the debt ratios down to 45. Things are starting to loosen up a little bit. Government loans on our case by case, generally 43%. The FHA and VA loans for debt ratios are 43%. From the time you purchase your home to the day you receive the keys, you'll be assisted by some of the following people. Realtor, call Craig Helm. Craig, what's your phone number?
407-314-8919. They can call me or call or text me anytime between 8 a.m. 8 p.m. Eastern Daylight Time, Monday through Sunday, 7 days a week.
Great. And you've got John Giacovelli. John, what's your phone number?
315-601-7058. Anytime you need me.
And I'm actually helping out right now with most of the loan processing, so you don't have any additional fees for that service. That saves you about, it could be as much as $700 on your closing fees. I've talked to different companies. They'll pay that. Me personally, right now, I'd rather pass the savings along to our client and not charge a processing fee. The processing is, like I said, $700, $500 to $700. Underwriting fees, every lender has an underwriting fee. A lender fee, underwriting, can be from $9.99 to $1,055. I've seen it. We'll give our client the option whether or not they would like to waive that fee. Because when you break down that $1,000 cost, let's say, it may not be worth it for them to pay that cost. It could take them, 2, 3, 4, 5 years to recoup that cost, depending on the loan size and the interest rate. So we'll give the client the option. I had a client this weekend tell me, he's like, no, I don't want to pay that. He says, we're going to probably have the house a couple years. It doesn't make sense for us to pay that extra cost. So we can waive that fee. And we also can give you options too if you maybe want to pay your own taxes and insurance versus escrowing and having the bank control your money. But a lot of people work with us, Craig, because they like that we do everything from start to finish. We don't have multiple cooks in the kitchen, as I say. And you guys have seen some of my videos. I like to cook for my family.
Yep.
Title company, usually the seller gets to pick the title company. They'll do the lien search on the home to make sure, things are good according to public records. The title insurance is to protect you against any future claims.
They could do a municipal lien search too, which is pretty good. That determines if you got any open permits or permits that hadn't been closed out. Because what can happen is if you let's say I have a buyer that buys a home, and usually I do the same thing from either side. I do it, make sure there's no open permits or permits that weren't closed out. Make sure that was done. Title companies I work with are pretty good about doing that. Because what can happen if they can move into a house, let's say they need contractual work. In other words, they have to get work done that needs a permit. And they go to the county, and the county comes back and says, hey, you got this permit that hasn't been closed out or still open. They won't issue a new permit until those are closed out, which means they can't get that work done until they close out those permits. And that can mean and of course, guess who gets blamed for that? The agent.
Yeah, jeez.
All right.
Imagine that, right?
Yeah.
But, that was one of the things I went through when one of the web or training sessions or with one of the title companies that I've worked with in the past, and because they do all that stuff, so you don't have that problem going into the deal afterwards, so they can't come back to you, yell at you, whatever, and all the permits are closed out, and there's nothing open. And
I know a lot of times they'll get that title agent or processor will work on those, getting those cleared up,
right,
for your buyer. I know a lot of times, us doing the mortgages, we have our order outs and we get that title in, but you definitely want to take a look and read it and see what's on there, because there may be a lien on there that the client wasn't aware of,
right,
that was never paid off, or so it's good definitely to have these title insurances for your protection. And I've seen even some sellers want to use a local attorney versus a title company.
which is fine,
depending on the location, I guess, but they pretty much do the same thing. I've just noticed different title companies are a little bit quicker than some of these local attorneys, real estate attorneys, but I guess it's on your expectations up front. What else we got here? This talks about a little bit more about the loan processing, what type of income documentation, assets to afford the home you want to buy. Generally, pay stubs for the last 2 to 3 pay periods. A lot of these lenders now that are in the COVID-19 realm here, they're asking for a pay stub, recent pay stub, usually right 10 days before closing. So, and they'll do a verification, sometimes 2-3 times just to call. I have some lenders that aren't as strict on these overlays right now, and some of them aren't doing. I think that, so continuing forward here, W-2s for the last 2 years or 1099s. Federal tax returns, 2 years is typical. Financial statements, from your bank, last 2 months to verify sufficient assets. I know FHA, you can provide 1 month's bank statement, 30 days, if you have the ending balances reporting properly on that last statement so the income, the balances aren't fluctuating. Fully executed purchase agreement. I mean, this is very important because without that purchase agreement, we can't lock in your interest rate sometimes, depending on what lender we work with for you. Some are, this is for a purchase. So typically we're not going to lock in a rate unless we have a purchase contract. I had one guy I've been working with for a couple of months and just talking about miscommunication. Sometimes text messaging could be misinterpreted email. And he actually texted me and he says, hey, I've got the title company for you. Does this mean that I'm obligated to working with you if we place the title order? And I said, well, I would think that, you basically definitely no, I don't have a broker contract that I have people sign, and no, you don't either, John. But it's all about making, figuring out I said to him, what's the problem, or, what are you afraid of? And he got all angry. He's like, what do you say? I'm afraid of anything. It's a straight answer, yes or no, through text messaging. So anyhow, we'll have to figure out what happens. I haven't seen a purchase contract come in yet. He was one of the guys I was telling you about that was working with flipping properties and trying to sell off the financing before it went to closing. And the transfer, I think Craig, I was talking about it.
Mm-hmm.
But anyway, explanation of credit inquiries. It's good to know if you're applying for car loans or credit cards. A lot of times your credit cards, they do their own credit inquiry update to check on things without you knowing. But usually we have to provide a credit inquiry within the last 90 days. Some are so just in the process, you want to make sure you're not buying any new cars or furniture.
Yeah.
Major purchases. I had one guy, I told him, he bought a new bed over the weekend, and we were able to work it out, but
yeah, they say no major purchases.
Major stuff
until after you do the deal.
Yeah. I mean, if you're needing, those funds to close, don't go spending your cash. So it looks like we're running out of time here.
No, you're not. You're okay.
Yeah? Okay.
Yeah, it's because you have unlimited minutes. You've been upgraded.
Oh, okay. So next step, we'll talk about the appraisal. We're almost here anyhow. The appraisal is an important part of this, as you know, because of the fair market value and with your contract. And I would say it's one of the most important steps in buying a home. Your home's appraised value is equal to your contract price, your combined loan and down payment amount. Your application will proceed towards closing. So as a buyer, I kind of hope the appraisal comes in a little low. Maybe then we can negotiate.
Right.
But, I mean, it just depends. What's your thought on that, Craig, as far as the appraisal? And
well, the appraise, I almost wish that when people sell their homes, that they would actually get their own appraisal first.
Right.
That way, I mean, I can do comps, but I'm not an appraiser. So that legally, I can't say it's an appraisal when I do a CMA on their home, comparative market analysis.
Right.
I'm legally not allowed to do that. So if they have, and I know people have actually had somebody appraise their house ahead of time, and that gives them a better idea how to, set the price, because the appraiser does pretty much the same thing I would do, except he goes in more detail, with the pricing structure and, in the area. He does a lot more due diligence on that, where I'm mostly looking at the solds, recent solds or current or properties under contract, and then doing any adjustments, based on what amenities the houses have, to bring them into par with each other. So the appraiser would do the same thing, except of course you have to pay for the appraisal. But it almost seems like we might be going that road. Get a pre-appraisal of a home before you sell it.
That would be nice. That would be nice. It's definitely one of the biggest pieces to the puzzle.
Right.
And we've been able to get appraisals back.
Right.
Within a week's time.
Because the common thing, not meant to interrupt you here, Chad. Common thing out there is people like to overprice their houses when they sell them.
Because they look on Zillow most of the time.
Zillow's Zestimate is all screwed up anyway.
Yeah.
Right.
But
well said. I mean, as a real estate agent, I know I worked a couple open houses with you in the past, Craig, and we know looking at it and the feedback that you get from the people visiting the open houses, right. A lot of times the house doesn't sell, and then the seller gets anxious, and then they think you've done something wrong or whatever, and then they can end up changing, and lower and dropping the price after the fact, after you've already told them where you think it should be. So you want to listen to your real estate agent that's representing you in your sale of your home, because they know what's realistically been selling. I mean, we have some lenders that I work with, John, as you know, that have the appraisal tool that we can kind of do a CMA lookup, seeing what's sold, and it's a little bit better than what you see on on Zillow or Trulia.com, but we definitely can provide you with that at smarthouselending.com. You can request a value report, and we can get that to you. What else we got here? When your loan is almost ready to close, you're going to get a closing disclosure. It'll be ready for your review, typically 3 days prior to closing. And sometimes you'll see maybe 2 or 3 of these before closing. And it's going to cover your loan amount, interest rate, your monthly payment, and interest payments. Itemized breakdown of your projected monthly payments, closing costs, and the money you'll need to produce at closing. There's a chart that explains all the loan costs in detail. This form came out back in 2000. I don't know if it was 2018, 2016. I think it's more complicated, this CD closing disclosure, than when we used to have the HUD 1 form. We'll see what happens if they're going to, make it a little bit easier. Nothing seems to be, when it comes to mortgages, they like to complicate things. I don't know who's driving the bus there in Washington, but we'll see what's coming up here. Anyhow, more on detail for your government fees, prepaid items, insurances, just basically a breakdown of, the monies that's needed. And
that taxes thing, that could be like prorates too.
Taxes, prorated, yeah. And there's an initial disclosure. We do a loan estimate, and then at the final you have the closing disclosure. So what I'd like to point out to people that are buying or refinancing, you're going to get a loan estimate. It's an estimate. It says estimate. And keep that in mind at the word estimate, because that's what it is. It's nothing that's locked in stone. I pride myself in being really accurate on the loan numbers up front.
Yeah.
And I would say, I'm probably within $200-300.
That's pretty good.
Which, I feel really good about. And when it comes to, like I mentioned, property taxes, on your pre-approval, we don't know the property taxes for that home. So that's why it's important to keep, in all fairness, give your loan officer a break. We can kind of give a ballpark idea, but, taxes, we don't know. And homeowner's insurance, we don't know exactly either how much the home insurance is going to be for that property if you don't have an address for us. So
those are the taxes not counting a homestead exemption.
Yeah.
Because people, they look at that, they think, well, that's still going to be the taxes. Not initially, because you got to do, you don't go on homestead right away. You have to, there's a time period, wait, basically. And that's usually what I follow up with customers, say, have you applied for your homestead? You could do that right away, depending what time of the year it is.
Right.
Get it out of the way. You do it online. You just go online and fill out the electronic form. Get it set up for you.
It's pretty easy.
That way you don't forget about it, because people will forget about
that's
those things.
Pretty smooth.
Right.
I think John and I were talking about that last week. We had the one client, the tax bill, it was an investment property. So she thought maybe the property taxes might be, lower once she can get the exemption right up front at closing.
Wrong.
Unfortunately, it didn't work that way. And back to the drawing board, she's looking for another home that's going to be more susceptible to her debt ratio and income.
Right.
But that's pretty much it. And the last step, closing, what to expect from there. Typically, depending on when you close, you're not going to have a mortgage payment for a month. Typically, you get to skip a month. This is basically talking about the documents signed, transfer of ownership, several documents related to your loan agreement and ownership of the property. You present your cashier's check at closing to your title agent. Usually, sometimes they'd like you to wire funds to the title company. And with everything that's been going on with the emails, scam, phishing, you want to be careful with providing your bank account information to anybody. And you want to basically talk to your closing agent at the title company, the day before. Make sure you go over these numbers over the phone. I've been really skeptical on emailing anything in regards to my bank account, because there's so many hackers out there right now, especially with everything that's been going on. A lot more scams are popping up daily.
The thing with the emails too, what they'll do is they'll create an alias email that looks like the original.
Right.
Change one character in it. And obviously you're not going to, you can miss that real easily. So that's why I tell my customers, call the title company for instructions, and they'll give you the encrypted link and all that stuff. That way you're not dealing with emails. That's because people, I heard thousands of dollars, hundreds of thousands of dollars being routed or redirected to like an outside bank. A lot of those scams are from offshore too.
Yeah.
They're not in the country.
Yep.
Crazy stuff. I had my bank account hacked last year, and it's something that they still don't have any answers for me. So Wells Fargo took good care of me. I give them a shout out. And if you need a good title company for a closing, I can highly recommend Nicole DeRusco with Cosmopolitan Title in Lake Mary, First American Title in Apopka. They just did a great job on a closing that funded today. MIS, Mortgage Information Services in Miramar, they do a great job as well. And if anybody needs any other suggestions on title companies, but you close your house, you get your keys, just get your home, move in. The whole thing too on moving, maybe you could talk about, I don't know if guys, but John, you moved here from New York. Talk about that experience, and then we'll maybe we can wrap it up. I know you had quite the closing experience.
I moved from New York to North Carolina, and then 6 months later, North Carolina to here. So I had a moving company twice. I don't ever recommend going with the least expensive moving company. You got to be really careful. Yeah. We, of course, moving from North Carolina to Florida, we tried to do it as least expensive as we could. Tried to read a couple of good reviews, but we had a nice piano that actually came in upside down. It was the worst moving experience of my life. Was from North Carolina to Florida, and because we tried to cut the costs a little bit because we already moved, so we trying to save a little money. And unfortunately, it wasn't cheap. Don't get me wrong. They were a reputable company supposedly, but it was a nightmare. Like I said, they pulled up at my house at I think it was 2 or 3 a.m. the moving company, and they just started unloading stuff. They weren't even bringing stuff inside. It was bad. It was really bad. Yeah, I tried to block it out.
Well, I've used this one moving company here locally in Florida for years. And if you're looking for a good moving company that's for local here in Seminole, Orange County, these guys have always done a great job. They've helped me move, my brother, my sister.
Nice.
One of these deals like 2 guys in a truck kind of deal, but for a statewide move, that's got to be pretty stressful.
Yeah.
But hey, guys, I don't know if anybody else wants to share anything, but
just real quick here. Usually, when in real estate, and you probably run into as well, being in the mortgage business, you get didn't know what the reputable companies are out there, other contractors, Bonnie Wilford, would recommend it anybody.
A little technical difficulty there.
Based on this, being in this little ice storm we had last week. I don't know if the hail. I had hail over in my area here. I don't know if you probably did.
Yep, I got it.
Yeah, the ice, the chunks of ice.
Oh yeah.
Didn't do any damage. I checked everything out, but it sure was loud.
Yeah.
Bouncing off my path and clunk, blunk, like somebody was throwing stuff down, at the house, and it was hitting the garage door and making loud bangs, and it was really weird. This is like I've never seen anything like that. And I've seen hail, but not that kind. And we go out and I'll send you a couple of pictures of it from my neighborhood. But and then of course you in your little civic thing that you helped one of your clients out, his wife, to get back into the country.
Oh yeah.
And that was on the news twice. I think
to see that. That's pretty cool.
Yeah.
Joe Castro, his wife was in Peru, and we set up a GoFundMe. News Channel 6 hosted the story initially, and he sent me the video clip, and I just felt it in my heart to send out help him set up the GoFundMe. We were able to raise $3,000 to help her get back from Peru. I'm still waiting on the funds from GoFundMe, but it's just
it's one of those things. It'll come.
So we're able to get the debit card out and help her get her ticket booked. And suppose we're supposed to get the funds by this Thursday, but this was almost 3 weeks ago that we did this. And anyhow, Joe put a nice little thank you, for us on the news channel. Hosted the, interviewed both of them with her being back from Peru. John, I'll send you the video.
Yeah, that's cool.
But that was pretty cool. Really, really nice. He gave us a shout. He said, thanks to Chad Sorci and family and, Sorci Realty. And I don't do real estate, but it was pretty nice that he just mentioned my name.
Nice.
And my brother, Travis, because, Travis helped out as well.
Awesome.
Great, guys. Great meeting everybody.
Right.
Thanks, everybody. Again, Chad Sorci, SmartHouse Lending. Craig Helm with the Charles Rutenberg. What's your number again, Craig, for contact?
407-314-8919.
And John, give us your phone number again for the video here. Shout out.
Absolutely. 315-601-7058.
That's a New York number, 315. I grew up. I can remember my phone number back in the day. But I'm at 813-380-81
Upstate New York.
Upstate New York. We're here locally in Lake Mary, Seminole County, but we do the whole state of Florida. And we're in the process maybe down here the next few months to kind of see how things pan out with this COVID virus, but maybe we may look into getting licensed in some other states. And, I think that could be really good. And looking for some good loan officers. If you know of anybody that is looking to get into the business or wants to learn the business, we'll go from there. Check us out, smarthouselending.com. Thanks, everybody. Have a great day. We'll talk soon.
Yep.
Thanks, guys.
Take care, John. Take care, Chad.
Bye.